And next up is a panel on something both so relevant and prevalent in today's society, how ETFs can capture the AI boom. Please join me in welcoming in Jay Jacobs, U.S. Head of Thematic and Active ETFs for BlackRock, and Ivana Delevska, the founder and CIO of Spirit Invest. It's so wonderful to be both of you today on such a nice and beautiful day.
Pleasure.
Thanks for having us, Dan.
Of course, it's great to be with you, Jay. Let me start with you. Where do you, Jay, currently see the most opportunity in markets?
Well, I think what's kind of appearing this year is that this is really a thematic-driven market. You go back to some of the sell-off tantrum around DeepSeek. You've seen a lot of the reactions to tariffs and geopolitics this year. This year is not a story of sectors. Sectors doesn't effectively capture things like geopolitics and AI. This is not a story necessarily of things like industries or even countries. This is a market being driven by themes. I think this really is going to change the way that people think about how they build their portfolios in 2025 and beyond. You absolutely can still build a portfolio using core building blocks to get your kind of long-term, low-cost, lower turnover strategies. But if you're looking to play the way that the market is evolving today, you have to consider themes like AI and geopolitics as important niche corners of the market to find opportunities, as well as to avoid some of the risks out there.
No, for sure. It is an incredible time to be alive, especially with what AI is going to be doing. Anna, let me go over to you. Can you tell us your view about AI ETFs and maybe name some of your favorite AI ETFs?
Absolutely. So I can't really speak of my favorite ETFs, but I'll tell you my view. I think when it comes to AI, there is a lot of changes that are happening in front of us, and therefore they're creating a lot of winners and losers. So if you look at the mega cap stocks, for example, that's what everybody's focused on right now. They're not going to be the stocks of the future. So you really, in my opinion, need to be a little bit more balanced and look for what are going to be the winners of tomorrow. So what we do is we invest actively. So we manage a hedge fund-like strategy. And what that means is that we try to pick 20 companies that we think will lead in the next wave of AI at any given time. So we are really also focused on valuation, and we're really trying to kind of find more idiosyncratic opportunities rather than themes which Jay talked about, which is a completely different way of doing it. Sure.
And Jay, back to you. What themes are you excited about?
Well, I hinted at it a little bit. I think one is artificial intelligence. So this shouldn't be a surprising piece of it, right? AI has been around for a while. In November 2022, you saw ChatGPT came out, and it was really kind of that iPhone moment for artificial intelligence. I think what investors have to think about, though, is not whether AI is a good theme or a bad theme. I think most people agree AI is a big, powerful theme. It's how do you access it? And one of the ways that we think that you should access the AI theme is by looking at the entire value chain. It's not just about the Mag 7 companies. Yes, they have a lot of money. They're investing very heavily in AI. Some of them are developing some of the largest, most powerful large language models. But if you look across the value chain of AI, there's a few different layers of what we're calling the AI tech stack where there's opportunity. At the bottom, you have a very foundational layer of digital infrastructure. AI doesn't just happen in thin air. There's literal physical real estate that has access to power, that is storing semiconductors, that has tons of compute, that has security, that's located near city centers where there's a lot of AI demand. This has become very valuable in this massive build out of artificial intelligence. So the digital infrastructure layer is really important. On top of that, you have data owners. So that can be social media companies that have a lot of language data. That can be healthcare companies that have a lot of healthcare data. That has become really valuable in the age of AI because data is really the fuel powering a lot of these AI platforms. Sure. Now, above that, you have large language models themselves. These are obviously some of the most powerful AI software in the market today. That's where companies like the Mag 7 are very important. But even beyond the large language models, you have applications that are adopting artificial intelligence, that are becoming smarter, more powerful, more valuable to their customers. Think about, if your streaming service does a better job recommending your next TV show, you're likely to watch more TV and spend more money on that streaming service. So the applications that are adopting AI are an important part of the value chain as well. So when we look at in summary, when we look at the AI theme, it's really about looking across the entire value chain. This is not just a Mag 7 play. We really like to look at it across those different parts of the tech stack. And that's where an ETF that's investing across the value chain, like ARTY from iShares, ARTY, is really giving people one ticker solution to be able to play across that diversified basket of stocks.
Absolutely. Anna, let me go back to you. And obviously, we know there's a lot of stuff going on around the world. From your perspective, how are you navigating the geopolitical risks, such as obviously U.S.-China tech tensions, which disproportionately impact the semiconductor and networking supply chains, which of course are so important to AI?
Well, absolutely, Dan, there is a lot of geopolitical risk, but really what is important for people to keep in mind that it's really fundamentals that are driving these stocks and this industry. So when people sell based on geopolitical concerns, at the end of the day, if you need data centers, if you need to build out the infrastructure, whether there is uncertainty or not, this is going to happen regardless. So I think that's something that really got lost in the first half, where people panicked out of a lot of high quality stocks. And that's really what we try to capture, some of these dislocations. And to build on Jay's point, I think it's very important not to be invested across at least for us, we try not to be invested across the board to get exposure, but to really find the best companies. And here's an example. Large language models, for example, is a very competitive space. That's not going to be the winner, because basically these companies need to keep investing money to get back to ground zero, essentially. So we're really trying to find areas where really the value will be created, but also captured by that company. And similar example are give applications. There's a lot of applications, but they're also very competitive. So it's a very competitive space. It's not easy to build a killer application. So you really need to find the company that can come up with a winner captures all scenario, or able to capture a large share of the market. So I think what is important for investors, not to get bogged down by the macro, because at the end of the day, if you find the companies that will generate and capture value, you will do well over time.
No, it's such a smart strategy. And Jay, back to you. How do you feel, geopolitical forces are affecting markets right now?
Well, it's, maybe the second or first most impactful theme in markets this year next to artificial intelligence. There's a couple of ways that we see this playing out. One is you're seeing increased tech competition around the world. So it's not just about U.S. technology. It's about U.S. technology in Europe, technology in Asia. And that's putting pressure on the tech sector, because what I think a lot of investors don't realize is U.S. tech gets 60% of its revenue from overseas. So the more geopolitical pressure you have on the tech sector, that can actually be a significant headwind for some of those major tech names. So one strategy is stay in tech, but really try to focus on the companies that have more domestic revenue, that hire more domestically, that produce more domestically, to try to reduce some of that geopolitical risk. I think the second thing we have to look at in the tech space, in the geopolitical sphere, is as you see more reshoring efforts, which could be through the lens of tariffs, could be through the lens of policies supporting domestic production, like the Infrastructure Investments and Jobs Act of 2021. It's not just about building more stuff in America, building more products. You also need the infrastructure to support it. You don't just kind of build a building and say, start building semiconductors. You need a lot of power. You need a lot of water. You need freight. You need the easy access to transportation. And so I think what's been a little bit overlooked from a geopolitical perspective is, as we reshore in America, we have to invest in infrastructure alongside that. Now, infrastructure is a great theme, but it's also a great portfolio tool, because it tends to be more defensive, tends to be lower volatility than the market, and tends to have built-in inflation protection. We really like infrastructure as this kind of growth theme that actually behaves a little bit more like value stocks. And then I think the third thing that you have to look at in geopolitics is we are seeing more risk out there from geopolitical conflict, whether that's impacting things like defense stocks, whether that's impacting things like cybersecurity names. It's happening both in the physical and digital world. So we believe if you want to kind of build the defensiveness in your portfolio, not through a volatility perspective, but really the importance of defense around the world, cybersecurity names in our iHack ETF, or actually our recently launched IDEF ETF. IDEF is an active way of looking across the defense industry of who's really kind of playing in the space where you're seeing increased spending and global shifts around where defense spending is happening.
Yeah, that's perfectly said. Ivana, back to you. We all know that right now, AI compute demand is surging. I mean, it's crazy. Where do you see the most compelling hardware opportunities? GPUs, networking, memory, or something maybe further down the stack, like cooling or power systems. I was just in Toronto for a conference, and I was looking at all these ways they're cooling the data centers. It really is fascinating. There's so many things going out there. How do you see that?
So absolutely, then I think the opportunities are across the entire hardware layer. So chips got particularly hard hit, or the data center trade in general got very hard hit in the first half. So we really found a lot of opportunities there. Smaller caps, especially on the networking side, was really well where the carnage was. So this is where we picked up a lot of good ideas on the sell-off. Stocks like, for example, in the power gen space got really hard hit, while they're actually beneficiaries of the reshoring investment. So I think across the board, I would say networking, just because of the market caps and the higher beta, is where we found the most opportunities in the first half, but we're invested across the board.
No, it really is. It's amazing. You definitely explained that beautifully. Ivana, I know AI is driving innovation across multiple sectors, from, of course, semiconductors to cloud to healthcare. How do you think ETF issuers define and construct sector exposure when building these AI-themed ETFs, which, of course, are, the title of our event today is ETF Revolution. It's a revolution.
Yeah, so absolutely. So different people have different approaches, and they all sound very, very interesting and compelling. Our strategy is hedge fund, like very much the investment and research style is very similar to the way you would invest in a hedge fund. And basically what it means is you have a defined universe of about 120 names, and out of those you select the 20 that you want to be invested in. So in my view, that's really the best way to invest. And our ETF is called SPRX for those that are not familiar. But there are other different ways to invest too. Our ETF is particularly higher risk because of its concentration. So it's really good for people that can take a longer term view. I think if you want to be more diversified, I think some of the names that Jay brought up sound very interesting. So it's all about people figuring out what is the level of risk that they want to take, and then allocating respectively.
Sure. No, it makes perfect sense. And Jay, when you think about where we're at today, where investors are at today, and as obviously AI becomes so much more prevalent, what do you think one thing investors need to know today about where things are and where things could be going?
Well, I think number one, we're still very much in the early stages of artificial intelligence as we think about kind of the timeline of AI. We're still in what we call the build phase. It's a lot of money being spent on CapEx to be able to build all the digital infrastructure to support the larger adoption of artificial intelligence. So today we're in the build stage. I think next we're going to be in the enterprise adoption stage. That's where companies and governments are going to be willing to spend a lot of money bringing AI software into their businesses, either to make their products better or to make their employees more efficient. That's when you'll see a big shift in where the money is being made in AI. So today, a lot of that money is being made in semiconductors and kind of that infrastructure layer, but in the enterprise adoption stage, or likely in the large language model space and in the data space. But finally, there's really going to be kind of the AI revolution stage. This is where you're going to see kind of widespread adoption of AI, brand new products, and even brand new industries being built using artificial intelligence, companies that maybe have barely even been conceived of yet. I think that's kind of the third and final stage of artificial intelligence. This mirrors what we've seen with things like smartphones, right? Where kind of initially you saw, maybe more of the 4G infrastructure benefiting from smartphones. Then you started to see kind of the smartphone platform manufacturers make a lot of money. And then you saw kind of new industries like mobile social media, mobile e-commerce, rideshare really popping up only because those other components had already been built and scaled. So I think AI is going to follow kind of a similar trajectory going forward. We're still very much in the early innings of this revolution.
Yeah, it's just the beginning of the ball game so far, right? Maybe the second inning. Ivana, same to you. What do you think is one thing that investors should know today?
Yeah, so I think Jay summarized it really well. I think one thing that I would say is that things are going a little slower than what people expect. And what I mean by that is that this year, everybody was like, okay, well, are we there yet? Are we done with the hardware trade? Not really. Like, this is going to be a multi-year. Just to build out the hardware infrastructure that we need, it's going to take 10 years. So we're really looking at exactly what Jay said, but step one may be actually 10 plus years. And then step two may be starting in 5 years and following that. So I think that's one thing for investors to keep in mind, that this is going to be a multi-year opportunity. It's not going to be all going in a straight line, right? Because there are winners and losers, and even on the hardware side, but specifically on the application side, there are going to be companies that are going to get disrupted, right? So I think there is going to be a lot of opportunities, but I think investors should be patient and be able to hold through pullbacks and consolidations.
That's well said. Well, listen, amazing stuff for you both. Before I let you go, though, and I can't thank you enough for joining us today to be part of this event. Jay, back to you. What's next for BlackRock? Take us a year ahead, 2 years ahead, 5 years ahead.
Well, I think what we're going to see is just a continuation of very theme-driven market. I think the influence of things like geopolitics, of artificial intelligence. We haven't even talked about demographics and aging populations in developed markets and the impact that means on people's portfolios. So my underlying message to investors is twofold. One, keep an eye on themes. I think increasingly markets are going to be driven by these themes. Second, though, I think people have to be nimble in how they're allocating to these themes. Now, we've brought out a product, ticker's THRO, THRO. It's a thematic rotation ETF, and very dynamically can allocate from across a variety of different themes. Right now, one of the themes it really likes is companies that are at the intersection of consumers tightening their belt, more kind of recessionary type of consumer companies, but that are also not tariff sensitive. This is kind of a unique basket of companies where, if you think about consumer staples being more defensive, but also very kind of susceptible to tariffs, we're not just looking at it through the sector lens. We're looking at the companies that are not going to be as susceptible to tariff risk as well. So THRO is a really dynamic way to look at themes in the market that can help people be more tactical in how they allocate to themes.
Love it. Ivana, to you, what's next for Spear Invest? What do you see happening to this incredible time to be alive?
Well, I mean, for us, it's really like we have one fund, and that's what we're really focused on to deliver alpha. I think there's going to be amazing opportunities across the board. I think it's going to be very important for people to understand what they're getting themselves into. So I think I can't really stress that enough. But I think there's going to be a lot of opportunity coming ahead as a result of AI.
Love it. Jay Jacobs, U.S. Head of Thematic and Active ETFs for BlackRock, and Ivana Delevska, founder and CIO of Spear Invest. Thanks again so much to both of you for joining me for such a wonderful discussion today.